The red numbers burn into your retina, minus 17% in one day. Your stomach feels like someone dropped a bowling ball into it. Your hands shake as you move the mouse toward the sell button. Every fiber in your body screams to get out now before it gets worse. This is the exact moment where winners and losers separate, where fortunes are made or destroyed, not by the market, not by some algorithm, but by what happens inside your head in the next 3 seconds. You are not alone in this feeling. Right now, across the world, thousands of traders are staring at the same red screens, their hearts racing, their minds spinning. Most of them will click that button. They will lock in their losses. They will swear never to trade again. Until next week when greed whispers sweet promises in their ear once more. Welcome to the brutal truth about trading. The market does not care about your mortgage. It does not care about your dreams. It definitely does not care about your feelings. And here is the thing that nobody wants to tell you. If you think like everyone else, if you feel like everyone else, if you react like everyone else, you will lose like everyone else. Normal people do not make money trading. Normal people work 9-to-5 jobs. Normal people save 10% of their paycheck. Normal people buy index funds and pray for 7% annual returns. There is nothing wrong with being normal. But if you clicked on this video, something inside you wants more. Something inside you believes you can beat the odds. The good news? You can. The bad news? You will have to rewire your brain to do it. Every new trader enters the market with the same fantasy. They think trading is about finding the perfect strategy, the holy grail indicator, the secret pattern that prints money. They spend months, sometimes years, jumping from system to system, moving averages, Fibonacci retracements, Elliott waves, each promising to be the answer. But watch what happens when 10 traders use the exact same strategy, same entry points, same stop losses, same targets. 1 makes a fortune, 3 break even, 6 lose everything. Same strategy, completely different results. Why? Because trading is not about the strategy. Trading is about the 6 inches between your ears. Think about Jesse Livermore, one of the greatest traders who ever lived. He made millions, lost millions, made them back again, lost them again. Same market knowledge, same experience, same strategies. But his emotions turned him from genius to bankrupt and back again. In the end, the market did not kill him. His own psychology did. Now think about Warren Buffett. Not exactly a day trader, but stay with me. While everyone else panics and sells during crashes, he goes shopping. While everyone else gets drunk on bull market euphoria, he sits on cash. For decades, he has done the opposite of what feels normal, and for decades he has printed money like a government mint. The difference is not IQ, the difference is not information, the difference is psychology. Here is something that will blow your mind. Your brain is a survival machine perfected over millions of years. It kept your ancestors alive by making them run from tigers and hoard food for winter. Those same survival instincts that saved humanity now destroy trading accounts. When you see profit, your ancient brain screams to grab it before it disappears. Just like your ancestors grabbed berries before other tribes found them. When you see loss, your ancient brain demands you run, just like your ancestors ran from predators. These reactions happen in milliseconds. Before your logical mind even wakes up, the market knows this. The market feeds on this. Every chart pattern, every price movement, every news headline is designed to trigger these ancient fears and greeds. The market is a giant psychology experiment and you are the lab rat. Watch what happens to a normal person's brain during a trade. Price goes up a little, dopamine floods the system, the same chemical that makes cocaine addictive. The trader feels invincible, a genius. Price pulls back, cortisol spikes, the stress hormone, the same chemical that floods your body when you almost get in a car accident. The trader panics, sells, usually at the exact bottom. This is not weakness, this is not stupidity, this is biology. And unless you learn to override it, biology will transfer your money to someone who has. Now we reach the fork in the road, the moment where everything changes, where you stop being prey and start being predator. But not the kind of predator you think. Forget everything Wall Street sold you about trading. Forget the Lamborghinis and the penthouses and the Instagram lifestyle. That is the cheese in the mousetrap. The real money in trading does not come from home runs. It comes from something so boring, so unsexy, so absolutely opposite of what normal people want that almost nobody can do it. The compounding mindset. A young trader starts with $500, chump change, lunch money. Most people would not even bother. They want to turn it into $50,000 by Friday. So they leverage up, they swing for the fences, they blow up, game over. But watch what happens when someone trades with a compounding mindset. They target just 2% per week. 2 measly percent. Pathetic, right? After 1 week, they have $510. Big deal. After 1 month, $540. Still pathetic. Normal people quit here. This is too slow, too boring. But math does not care about your impatience, week after week. 2%, like clockwork. No home runs, no excitement, just consistent, boring 2% gains. After 1 year, that $500 becomes over $13,000. After 2 years, over $400,000. After 3 years, over $11 million. Now, obviously, this is theoretical. Markets do not give you 2% every single week. You will have losing weeks, losing months. But the principle remains: small, consistent gains compound into fortunes. Home run swings compound into bankruptcy. The market pays you to be bored. It charges you for excitement. Stop right here for 10 seconds. Yes, actually stop reading. Because what comes next only matters if you answer this honestly. Are you willing to become the weirdo who passes on 20 trades to wait for one? Are you willing to be the oddball who celebrates a 2% month while your coworkers brag about their crypto moonshots? Are you willing to feel bored while getting rich? If you just skimmed past without stopping, you already have your answer. You are still normal. And normal people do not make abnormal profits. But if you actually paused, if you actually thought about it, then prove it. Drop one comment below with the worst trade you ever made. Not the biggest loss, the dumbest decision. The one where you knew better but did it anyway. Share it. Own it. Because secrets keep you stuck, but truth sets you free to profit. Then hit subscribe. Not for me. For the you who is tired of being normal. Every video strips away another normal habit that is keeping you poor. Your abnormal journey starts with abnormal honesty. Show me you are ready. Patience in trading is not passive. It is not sitting on your hands hoping for the best. Real patience is active, aggressive. It is the lion in the grass, muscles coiled, waiting for the perfect moment to strike. Not because the lion is lazy, because the lion knows that wasted energy means starvation. Every day, the market offers thousands of opportunities. Normal traders see this as thousands of chances to make money. Professional traders see this as thousands of chances to lose money. The difference? Professionals know that most opportunities are traps. Think about a sniper. They might wait days for one shot, not because they cannot shoot, because they will not shoot unless success is almost guaranteed. One shot, one kill, then back to waiting. This is not natural human behavior. Humans want action, want progress, want to feel productive. The market charges premium prices for these feelings. A real trader might watch a stock for weeks, studying its rhythm, learning its personality, waiting for that perfect setup. Then when it comes, they strike hard, not with their entire account like an amateur, but with calculated precision. They make their 2%, maybe 5%. Then back to waiting. Normal people cannot do this. They get itchy. They get bored. They start seeing patterns that do not exist. They convince themselves that this setup is good enough. They trade. They lose. They blame the market. The cycle continues. But you are learning to be different. You are learning that in trading, the money is not made in the trading. The money is made in the waiting. Let me tell you about Victor. Not his real name, but his story is real. Too real. Victor was smart, engineer smart. He understood probability. He understood risk management. He built a trading system that worked, 60% win rate, perfect position sizing, everything by the book. For 6 months, Victor printed money. His account grew steady. His confidence grew faster. He started telling friends, started planning his resignation letter, started shopping for cars he could not quite afford yet. The market had other plans, a news event, Federal Reserve something or other. The details do not matter. What matters is that Victor's positions went red, deep red, 20% drawdown in 2 days. Now here is where psychology shows its teeth. Victor knew drawdowns were normal. His system accounted for them. His risk management was solid. All he had to do was follow the plan. But knowing and doing are different animals. Victor watched his 6 months of gains evaporate. His engineer brain calculated how long it would take to recover. His monkey brain screamed that he was losing everything. Guess which one won? He abandoned his system, started revenge trading, trying to make it all back quickly. Every trade made things worse. Within 2 weeks, his account was gone, not reduced, gone. The market did not beat Victor. Victor beat Victor. This story plays out every single day. Smart people with good systems destroying themselves because they cannot control their emotions. Because when real money is on the line, when real pressure builds, intelligence becomes irrelevant. Only psychology matters. Professional traders have a secret. They do not care about money, not the way normal people care. To them, the numbers on the screen are just numbers, points in a video game. This is not because they are rich. Many started broke. It is because they train themselves to think differently. When you truly understand probabilities, individual trades become meaningless. Imagine flipping a coin that lands on heads 60% of the time. You bet $1 per flip. Sometimes you lose. Who cares? Over 1,000 flips, you are guaranteed to make money. The math is certain. Individual flips are just noise. Trading is the same. If your system has an edge, individual trades do not matter. Only the long run matters. But normal people cannot think in long runs. Every trade feels like life or death. Every loss feels personal. Every win feels like destiny. This emotional roller coaster is what the market feeds on. Professional traders feel nothing, win or lose. They execute their system like robots. Not because they are emotionless, because they move their emotions somewhere useful. They get excited about improving their system. They get passionate about risk management. They channel feelings into process, not outcomes. This is learned behavior. Nobody is born this way. It takes practice, painful practice. You start small. Risk amounts that do not matter. $20, $50. You practice feeling nothing whether you win or lose. Slowly increase size as your emotional control improves. This is how you build the mental muscles that will make you rich. Quick reality check. You have been following for several minutes now. In that time, thousands of traders just panic sold the bottom. Thousands more revenge traded themselves into deeper holes. Thousands more are right now staring at charts, begging for magic patterns to save them. But not you. You are here, learning the only edge that matters, the psychology edge, the compound edge, the patience edge. So here is my question. Are you absorbing or are you transforming? Absorbers following and nod and forget. Transformers follow and act and profit. Which one are you? Prove it. Comment below with one specific action you will take tomorrow. Not someday, tomorrow. Maybe you will risk only 1% instead of 5%. Maybe you will journal your trades instead of forgetting them. Maybe you will wait for your setup instead of forcing trades. One specific action. Public commitment creates private discipline. If you are serious about breaking the normal cycle, hit that notification bell. Because while normal traders are sleeping, we are dropping psychology gems that compound into millions. Set it to all. Show up like your wealth depends on it. Because it does. The herd is grazing on quick tips and hot picks. We are building millionaire mindsets. Which group do you belong to? Markets change. What worked yesterday might kill you tomorrow. The traders who survive are not the ones with the best strategies. They are the ones who adapt fastest. But adaptation requires something most people cannot do. It requires admitting you are wrong. Look at the traders from the 1990s. The dot-com boom created a generation of momentum traders. Buy anything tech, sell it higher tomorrow. It worked until it did not. When the bubble burst, the traders who insisted on using the same strategies got slaughtered. The ones who adapted survived and thrived in the new environment. Or take 2008. The financial crisis changed everything. Correlations that held for decades broke overnight. Strategies that printed money for years suddenly bled accounts dry. The stubborn traders, the ones who knew they were right, who refused to change, they disappeared. The flexible traders, the ones who accepted the new reality, they made fortunes in the chaos. Markets are living things. They evolve, they adapt, they develop immunity to popular strategies. What everyone knows stops working. This is why the Holy Grail strategy does not exist. This is why you must become a student forever. Read about market wizards like Marty Schwartz. He started as a fundamental analyst, failed for 9 years, 9 years of losses. Most people quit after 9 months. But Schwartz adapted. He switched to technical analysis, learned new skills, became one of the most successful traders alive. Not because he found the perfect strategy, because he never stopped evolving. Normal people learn one thing and stick to it forever. They defend their methods like religion. They blame the market when things stop working. Professional traders treat strategies like tools. When a hammer stops working, they pick up a screwdriver. No ego, no attachment, just results. Here is where things get interesting for the little guy. For you sitting there with your small account feeling like the game is rigged for the rich. The beautiful truth about percentage gains is they do not care about account size. 2% of $500 is $10. 2% of $5 million is $100,000. Same skill, same strategy, just different zeros. This is your edge. The big funds cannot do what you can do. They cannot get in and out of positions quickly. They cannot trade small cap stocks without moving the market. They cannot change strategies overnight. Their size is their prison. Your size is your freedom. Let me show you the math that should make your heart race. Start with $1,000. Make just 10% per month, not per year, per month. After 1 year, you have $3,000, still small. After 2 years, $9,000. Getting interesting. After 3 years, $28,000. After 5 years, $300,000. After 7 years, $2.7 million. 10% per month. That is 2.5% per week. That is 0.5% per day. These are not fantasy numbers. These are achievable goals for someone who masters their psychology and compounds consistently. But here is the trap. Normal people see these numbers and get greedy. They think if 10% is good, 50% is better. So they leverage up, they overtrade, they swing for home runs, and they zero their accounts every single time. The path to wealth is not complicated. It is just hard. Not technically hard, psychologically hard. Because it requires you to be satisfied with base hits when everyone else is swinging for the fences. Every trader has a number, the amount where their psychology breaks. For some, it is $1,000. For others, $10,000 or $100,000. Below this number, they trade like professionals. Above it, they become idiots. Watch what happens. A trader grows their account steadily, everything going to plan, they hit their psychological limit. Suddenly, they start making weird decisions, taking profits too early, holding losers too long, skipping good setups, taking bad ones. They do not realize what is happening. Their subconscious is sabotaging them, pulling them back to their comfort zone. This is why lottery winners go broke. This is why most traders never grow past a certain point. Not because they lack skill, because they lack the psychology to handle success. The solution is not what you think. It is not about positive thinking or vision boards or any of that nonsense. It is about systematic desensitization. Like curing a phobia, you expose yourself to slightly uncomfortable account sizes repeatedly until they feel normal, then push a little further. Some traders do this by withdrawing profits regularly, keep the account below their psychological limit while building wealth outside the market. Others practice with demo accounts at higher sizes, training their brain to see bigger numbers as normal. The method matters less than the recognition that this barrier exists. Your biggest enemy is not the market. It is not other traders. It is not even your strategy. Your biggest enemy is your own success. Because success will take you places your psychology is not prepared to go. And if you do not prepare, you will sabotage yourself back to comfort. We need to talk about what happens next, because following this far means you are different. Normal people bounced after the first paragraph to find someone promising easier money. But you stayed, you absorbed, you understood. The knowledge is in your head now. The question is, will it stay there like dusty textbooks, or will it move to your fingers when you trade? Here is what separates the educated broke from the simply rich: implementation. So I am issuing a challenge. For the next 30 days, document every trade, not just entry and exit, the psychology, what you felt, what you thought, what made you pull the trigger or hold back. 30 days of brutal honesty with yourself. Comment commitment below if you accept. Just type those 2 words, let them burn into your brain, because public promises create private performance. Then subscribe and join the 2% who think in decades, not days, who compound wealth, not just trades, who get excited about base hits while everyone else strikes out swinging for home runs. Every week we go deeper into the psychology that separates the transferers from the receivers of wealth. Miss one video and you might miss the insight that changes everything. Your future self is watching. What will you show them? Professionals think about trading like running a business. Not gambling, not investing, a business. Every business has costs, every business has revenues, every business has good months and bad months, no emotion, just numbers. When McDonald's has a bad quarter, they do not close all stores and quit. They analyze what went wrong, they adjust, they continue. This is how professionals approach drawdowns. Cost of doing business, part of the process, no drama. Amateurs think every loss is a personal failure. Every drawdown is a crisis. They attach their self-worth to their profit and loss. Win equals smart, loss equals stupid. This emotional attachment clouds judgment, creates fear, destroys discipline. Professionals keep detailed records, not just trades, psychology journals. What they felt before, during, and after each trade. Patterns emerge, triggers become visible, weaknesses get exposed, then systematically fixed, like debugging code, no judgment, just improvement. They also understand seasonality. Markets have rhythms. Certain months are harder, certain conditions favor their style. Others do not. They trade harder when conditions align. They trade lighter or not at all when they do not. Like farmers planting in spring and harvesting in fall, working with nature, not against it. This is not natural thinking. School taught you to show up every day, work hard constantly, always be productive. Markets punish this mindset. Markets reward selective aggression, strategic laziness. Knowing when not to play is as important as knowing when to play. Let me tell you about Sarah. Real person, real story. Started trading in 2018 with $2,000, single mom, full-time job, no fancy education, just determination and the right mindset. Sarah did something unusual. She decided to master one pattern, just one, a simple breakout pattern on the daily charts. Nothing sexy, nothing complicated. She paper traded it for 3 months, tracked every detail, win rate, average gain, average loss, maximum drawdown, like a scientist. When she finally went live, she risked exactly 1% per trade, $20, laughable to most traders. But Sarah understood something they did not. Consistency beats intensity. She averaged 3 trades per week, 2 winners, 1 loser, net gain of 2% weekly. 2% of 2,000 is $40. Barely worth the effort, right? But Sarah kept going, week after week. $40, $42, $44. The gains grew slowly, so slowly that her friends mocked her, told her to get a real investment strategy. After 1 year, her account hit $6,000. After 2 years, $18,000. Still working full-time, still trading the same boring pattern, still risking 1%. But now 1% was $180, same effort, bigger rewards. Year 3 is when compound effect showed its teeth. Her account crossed $50,000. 1% risk was $500. Her weekly gains exceeded her job income. She reduced hours at work, focused more on trading, not more trades, better trades, quality over quantity. Today, Sarah manages multiple six figures. Same pattern, same discipline, same boring consistency that her friends mocked. She did not need to be a genius. She did not need inside information. She just needed to do what normal people cannot do. Stay disciplined when discipline is boring. Here is the truth nobody wants to hear. Risk management is the only thing that matters. Not entries, not indicators, not market analysis. Risk management. Because you can be wrong 70% of the time and still make money with proper risk management, but you can be right 90% of the time and go broke with bad risk management. Professional traders think about risk first, reward second. Amateurs do the opposite. They see potential profit and work backwards. Professionals see potential loss and decide if the reward justifies it. Complete mental flip. The 1% rule is not a suggestion, it is survival. Risk 1% per trade, period, no exceptions, no special situations, no sure things, 1%. This means on a $10,000 account, you risk $100. On a $1,000 account, $10. Numbers that make normal people laugh. Numbers that make professionals rich. Why so small? Because losing streaks are not possible, they are guaranteed. Even the best traders face 10, 15, 20 losses in a row. At 1% risk, 20 losses is 20% drawdown. Painful but survivable. At 5% risk, 20 losses is account death. Game over, no recovery. But risk management goes beyond position sizing. It includes correlation risk. Trading 5 tech stocks is not 5 trades. It is one big trade. When tech crashes, all 5 crash together. Diversification means different sectors, different strategies, different time frames. True diversification, not pretend diversification. It also means knowing when to stop. Daily loss limits, weekly loss limits, monthly loss limits. When you hit them, you stop. No exceptions, no revenge trading, no making it back. You stop. The market will be there tomorrow. Your account might not be if you keep trading on tilt. Trading is a lonely business. You sit in front of screens, make decisions alone, win alone, lose alone. This isolation becomes dangerous. Without reality checks, traders develop tunnel vision, bad habits, destructive patterns, nobody to call them out. Smart traders build networks, not for tips or signals, for accountability, for perspective, for sanity. But choosing the right people is crucial. Most trading groups are toxic, full of ego, full of lies, full of people pretending to be profitable while bleeding money. Look for traders who talk about process, not profits, who share losses as openly as wins, who focus on improvement, not impression. These people are rare. When you find them, hold tight. They will save your account and possibly your sanity. Mentorship accelerates learning, but real mentors do not sell courses for $97. Real mentors are successful traders who remember being where you are. They help because someone helped them. They teach principles, not strategies. Psychology, not patterns. They know the real edge is mental. Avoid anyone promising easy money, fast results, secret strategies. These are marketers, not traders. Real trading wisdom sounds boring. Manage risk, control emotions, stay disciplined, compound gains. The same advice repeated different ways because it is the only advice that matters. Your environment shapes your results. Surround yourself with gamblers, become a gambler. Surround yourself with professionals, become professional. Choose wisely, your account depends on it. Winners focus on process. Losers focus on outcome. This sounds like motivational nonsense until you understand the psychology behind it. When you focus on outcome, every trade becomes emotional. Win equals happiness. Loss equals misery. Your mood swings with the market. Your decisions become erratic. When you focus on process, emotions stabilize. Did you follow your rules? Yes? Then the trade was successful regardless of profit or loss. This mental shift changes everything. Fear disappears because you are not attached to results. Greed disappears because you are satisfied with execution. Professional athletes understand this. A basketball player does not think about winning while shooting. They think about form, elbow position, follow-through, footwork. The score takes care of itself when the process is right. Trading works identically. Your process includes everything: research method, entry criteria, position sizing, stop placement, profit targets, trade management, exit rules, record keeping, review procedure. Each element must be defined, written, followed religiously. But process is not static. It evolves through review. Every week, analyze your trades, not the profits, the execution. Where did you deviate from process? Why? What patterns emerge? Adjust the process based on data, not emotion. Continuous improvement through systematic review. This is how trading becomes boring, mechanical, profitable. You become a factory worker. Clock in. Execute process. Clock out. No drama, no excitement. Just consistent results that compound into wealth. The biggest battles in trading happen inside your head. Before you click buy, after you click sell, during the long hours of watching positions. These internal dialogues determine success more than any external factor. Fear speaks loudest. What if it goes against me? What if I am wrong? What if I lose everything? Fear paralyzes, creates hesitation, makes you miss entries, exit too early, size too small. Fear keeps you poor by keeping you safe. Greed whispers sweetest. This could be the big one. Double the position, hold for more profit, ignore the stop loss. Greed makes you overreach, oversize, overtrade. Greed makes you rich in fantasy and poor in reality. Hope lies most dangerously. Maybe it will turn around. Maybe the news will save me. Maybe tomorrow will be different. Hope makes you hold losers. Ignore reality, break rules. Hope transfers your money to traders who trade reality, not wishes. Master traders recognize these voices, label them, thank them for their input, then ignore them. They trade their plan, not their emotions. They trust their system, not their feelings. They follow rules, not impulses. This mastery comes through practice. Meditation helps, not the mystical kind, the practical kind. Sitting quietly, observing thoughts without attachment, learning to see emotions as temporary weather, not permanent climate, learning to act from logic, not feeling. Success in trading costs more than money, it costs relationships. Normal people do not understand why you stare at charts, why you wake up at market open, why you cannot go out during trading hours. They think you are wasting time, gambling, being antisocial. Success costs sleep, watching Asian markets, catching London open, preparing for New York. Global markets never rest. Neither do serious traders, not forever. But during the learning years, the building years, the sacrifice years. Success costs ego. Every loss is a teacher. Every mistake is tuition. You must admit wrongness daily, publicly if you share results, privately always. Most people protect ego over profits. That is why most people lose. Success costs comfort. Stepping outside comfort zones, taking calculated risks, facing fears, doing what feels unnatural. Normal people choose comfort. That is why normal people get normal results. But here is what nobody tells you. The cost is temporary. The rewards are permanent. The relationships that survive become stronger. The sleep returns with financial freedom. The ego transforms into quiet confidence. The discomfort becomes your new comfort zone. Every professional trader paid these costs. no exceptions, no shortcuts. The only question is whether you are willing to pay, whether the vision of your future is worth the sacrifice of your present. Only you can answer that. Think beyond yourself, beyond this month, this year, this decade. What legacy will your trading create? Not just money, impact, knowledge, opportunity, freedom, for you, for your family, for others walking your path. Legacy traders build systems that outlast them, document everything, create procedures, train others, not to create competition, to create continuation, to ensure the wealth-building machine operates beyond one person, beyond one lifetime. They think in generations. How will this decision affect my children, my grandchildren, not just financially, psychologically? What lessons am I teaching through my actions? What habits am I modeling? What mindset am I passing down? This long-term thinking changes everything. Day-to-day volatility becomes irrelevant noise. Monthly drawdowns become minor speed bumps. Annual returns become building blocks of generational wealth. Perspective shifts from microscope to telescope. Legacy traders also give back, share knowledge freely, mentor newcomers, support community, not from obligation, from understanding. The market gave them freedom, they help others find the same, creating positive cycles that compound like profits. Your legacy starts today. With this trade, this decision, this discipline, this patience. Each action builds or destroys. Choose wisely. Trade like your great-grandchildren are watching, because in a way they are. You started this journey as a normal person with normal reactions and normal results. Through thousands of words, dozens of concepts, countless examples, you have seen what it takes to evolve. To become the trader who takes money instead of giving it. The evolution is not comfortable. Comfort is the enemy. The evolution requires rewiring instincts developed over millions of years. Fighting biology, conquering psychology, mastering emotions, building discipline, embracing boredom, compounding consistently. Remember Victor, who lost everything through emotional trading. You now know why. Remember Sarah, who built wealth through boring consistency. You now know how. Remember the mathematical truth that small gains compound into fortunes. You now know the path, but knowing and doing remain different animals. Information without implementation is worthless. Knowledge without action is trivia. The question becomes simple: will you remain normal or will you evolve? The market is waiting. It does not care about your decision. It will exist tomorrow with or without you. It will transfer wealth from the impatient to the patient, from the emotional to the logical, from the normal to the evolved, as it always has, as it always will. Your account balance in 5 years depends on your decision in the next 5 seconds. Will you close this video and return to normal life? Or will you take the first step toward transformation? Will you start that trading journal, build that process, practice that patience, master that psychology? The choice seems small. It is not. It is the difference between dreams and reality, between hoping and having, between normal and exceptional, between poverty and wealth, not just financial wealth, mental wealth, emotional wealth, freedom wealth. Welcome to the truth about trading, the game where being normal guarantees failure, where thinking differently guarantees opportunity, where small actions compound into life-changing results, where psychology is the only edge that matters, where you have everything you need to succeed except the decision to begin. Make the decision, take the action, start the journey. Your future self is watching. Make them proud. The market opens in a few hours. Will you be ready? Not with strategies or indicators or analysis. Will you be ready mentally? Will you trade like a professional or react like an amateur? Will you build wealth or transfer it? You now know the answer. The only question is whether you will live it. Welcome to the 1%, the evolved, the exceptional, the wealthy. Not because you are there yet, because you have decided to begin the journey. And that decision, that single moment of choice, is where every fortune begins. Now go make it happen. The market is waiting. Your legacy is calling. Your evolution starts now. What was your biggest psychology mistake in trading? Drop it in the comments below, share your story, help others learn from your experience. Subscribe if you are ready to master your trading psychology. Hit the notification bell to catch every lesson on this journey from normal to exceptional. Remember, the market pays you to be different. Start today.